Let's look at the VIX, because a big move could happen. First off, read this disclaimer carefully. So we can find the VIX here. It is the volatility index on the S&P 500. It is currently at the lows, and it is pretty far away from the highs. So here is the VIX, and also here's the UVXY. That's the leveraged way to get exposure to the VIX. It is definitively not a buy and hold ETF. It deteriorates very substantially over time, but when you are part of these volatility spikes, then the gains come fast, like all of a sudden 63%. So the reason why the VIX is very interesting is that we are really, really, really low. There's a just ridiculous low level of concern in the market. You could also say complacency. So when we go way back here in time, you can clearly see that this is definitively on the low end of the range for the VIX. This is where you can get that insurance on a discount, and getting insurance on a discount is definitively rather appealing. So if we go back here and draw the line, you can see that there is support back here. So this is basically a level where we see usually some increase in the VIX. Going to the dailies, really, really, really low. When we look at, the PPOs and the RSI, okay, oops, I shouldn't change that one. Let me just modify it a bit, like that. Okay, so you can see here on RSI, on the weeklies, we are basically at a support level. It's very rare for us to have this reading. Looking at the PPOs, similar, this is at support. Looking at the dailies, when the data loads, you will also see that we are really at a low level. It's not a screaming buy on the dailies, but it's definitively a buy. It's just too low. So in my notes, I write RSI support. This is just too good of a level to pass. So this is like bullish for the VIX. I will give the VIX, let me give it an 8. This is just very, 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 very good. It is important to be aware that what is bullish for the VIX is bearish for the market, because the volatility index going up is going to mean more volatility, which is not good for stocks. But yes, you need to just sort of flip the logic in your head then when it comes to bullish and in the terms of VIX, talking about the VIX. Looking at the seasonality forecaster to the left shows us the trend over the last 10 years in red, 7 years in blue, and 5 years in green. We do see that there is a tendency for a spike in the VIX into early May, but then a deterioration actually into mid-June. When we go to the table view, we see that so far in April, we have lost 15% on the VIX, which is on the high end of the spectrum. So it means that a lot of the complacency might actually already be priced into the VIX. Looking at May, it has a tendency to be green, especially when you go back to 2010. So over more than the last 10 years, you see that it usually is a pretty green month. June is also a green month for the VIX. So May and June, bullish for the VIX. Going back to the seasonality score here, I think I will give the bulls a 6 here on the seasonality. This is pretty good here for VIX. When it comes to fundamentals, it doesn't make any sense to give the VIX like a fundamentals rating. Okay, so now let's go here to this tool, type in the VIX, like that, go long term. Comparing it against the SPY, we will also compare it against the UVXY, which is the ETF. And what other things? Yeah, maybe we should compare it against gold. That's an interesting indicator, because of the idea that gold is like the flight to safety. Okay, so these are the long-term correlations. We have minus 58% with S&P 500. We only have 45% positive with the UVXY, which shows us that there is tracking error. UVXY is definitively not a buy and hold ETF. Short term, however, it can work really well. With gold, we have minus 9%, so not much in terms of a correlation there. Looking short term here, getting some weird data here. Let me just sort of like get Okay. Yeah, very confusing data actually here on the UVXI and the VIX. Yeah, I'm not into yeah. Okay. So we have 90% negative with S&P 500. So they do more or less move opposite each other. Minus 80% with gold, also rather negative. But the UVXI data here is sort of a bit broken. There is a lot of rebalancing and restructuring of the UVXI. Hence, it could be something like that that screws up the data. But if we zoom in a bit here, you can see that short term, the correlation is usually very strong. So 91% here. If you go here, 95%, 95. So short term, very strong correlation. So yes, they do. UVXI is a decent way to get exposure to the VIX. Looking at the SPY, we did have that negative correlation. So it means that what is good for the SPY is bad for the VIX and the opposite. S&P 500 is approaching the blue 100-week moving average. We have approached it before and gotten into trouble. Here we were rejected. So it's a level where we assume the bears are going to put on some shorts, and also the bulls might get a bit skittish. Looking at the dailies here, a bit of a breakout in development here. Okay, so let's look at. So let's get the RSI and the PPO. We're not overbought on the weeklies, on the dailies. We're not overbought, but we are elevated. This is not a level where we should be like really ballsy and put on new big bull positions on the SPY. So let's look at the seasonality here. Usually see some weakness into early May, but then there is some strength. Looking at the table view, April 1.6% so far. April is a pretty good month. May isn't really that shabby either. It's a relatively green month here for the SPY, so this whole sell in May and go away. Not really playing itself out recently. June is weaker. Okay. So let's compare the wicks with the SPY like that. We get the weeklies, we do it like this, and like that, and get the SPY. Okay. Very low. The VIX is abnormally underperforming the S&P 500. So there's a very high level of complacency. Let's go really far back. Yeah, this is really complacent. Looking at the RSI, very rare low reading. So statistically speaking, it has not been a good idea to bet against the VIX going up at these levels historically. So the odds would then be against you, meaning the odds would be in your favor if you were to have a bit of a gamble that the VIX is going to go up when you have these readings. On the dailies, looking at the chart below us here in blue, really low. We are at support. So let's give this a score. I do think that the numbers here, especially on the RSI, on the relative performance, I will give it a whopping 9 here in favor of the bulls. This is just way too high, too good of a setup here for the VIX. So the VIX gets a 7.7 in favor of the bulls. We are at RSI support. And RSI support also jumped at us when we looked at relative performance. This is really a high level of complacency in the market, which is dangerous. Buy fair, sell the greed, and there is definitively greed when you have just approaching record levels, low levels on the VIX. Okay, we do have some time left. Let's actually have a bit of a look at electric vehicles, because I do have a theme with a bunch of them. So let's WKHS, that's Workhorse Group. Let's see, start with that one and see how far we get. Very low level, potentially horizontal support going way back here to 2012. So this is low. Yeah. Okay, interesting. The seasonality is actually rather bullish into early May. April been terrible for Workhorse. May is not really a green month either, though, so that's a bit of an issue. Looking at the fundamentals, yeah, We are low on price book, also price earnings. Let's look at the price targets. The forecasts. Rather bullish price targets here. 5 analysts covering the stock. So as far as a speculative buy on Workhorse, it looks interesting from a bullish perspective, but this is definitely a high octane stock where losses and gains can come pretty quickly. And Neo Technologies also an EV stock. Similarly, we see a rather low level, but we do have a resistance from the purple 20-day moving average. Yeah, let's move on. VMR is the next on the list. Vision Marine Technologies. Yeah, let's look at the dailies. Resistance from the green 50-day moving average. So the setup here for Vision Marine is a bit noisy. Let's just jump ahead to Tesla. Yeah, it lost the red 200-week moving average, which is not good. Looking at the dailies, just a messy setup. Just we don't have any clear support. Seasonality, very noisy here into late May. So currently it's not that interesting. Let's look at Lucid. It was big, a lot in the news back in the day, but now the stock is down. Yeah, it's yeah. Let's go to the yeah. I mean, they're just noise here. I don't like to trade into the noise. Let's look at Neo. Okay, this is very low, so it's interesting from a value perspective. It's been much higher in the past, so either people were completely wrong between June 2020 and now, or maybe the truth is in the middle. And if the truth is somewhere in the middle, then we could talk about a lot of gains. So it's really low. That's the thing. We are not at an extreme buy here on the RSI though, on the weeklies yet. On the dailies, I wish we were a bit lower on RSI and also the PPOs, but we are, however, low. Seasonality. April, this was the worst April on record. May and June have a tendency to be better though. So that's interesting. That's interesting for a bull. A very low level here on price book. You could argue that this is support on price book. You see that this level back here in March of 2022. Price to sales is very low. Price earnings, however, is a bit higher. Let's look at the forecasts. Yeah, all the analysts, even the pessimists, sees at least a 1.68% price target to the upside. Okay, we looked at the VIX and then we explored some stocks in the electric vehicle megatrend. I do think that NEO looks interesting, though. It is really at a key low level. The seasonality was not that shabby, and the fundamentals were promising. The problem, of course, with NEO is the geopolitical situation around Taiwan. If that were to escalate, then there will definitively be sanctions in the West against NEO, which would obviously not be that bullish for the stock. So there's that. But if you ignore that factor, then the situation is definitively rather promising for NEO. So one to have on your radar. And as usual, I do wish you a great week ahead. And yeah, always have an interest signal and a stop loss.